You want to buy a business. You've got the dream, you've got the drive, and maybe a spreadsheet or two, but let me ask you one thing. Do you know what a lender sees when they look at your deal? Reality is I do. I've sat in this chair for almost 20 years, and I can tell you this. That most deals die long before underwriting ever sees them. Not because the business is bad or not because the buyer isn't smart, but because nobody ever taught them the actual rules of the game. And that's why we're here. I'm Shane Pierson, SBA National Sales Manager and host of Lords of Lending podcast. They call me the Deal Alchemist because I've spent the last 2 decades turning what is really just a bunch of messy deals into, I call, bankable gold. Just throw that one in there.
And that is how it's done.
But my entire career has been built around one mission, and that's helping real small business owners finance their dreams the right way, with honesty, with precision, and with structure. And today I'm going to walk you through exactly what it takes to buy a business with an SBA loan, step by step. Every day somebody wakes up and they'll hop on BizBuySell, seeing a business making close to $200,000 in profit and think, you know what, I think I'll buy this business I'll go out and get an SBA loan and that cash flow can cover the payments for sure. Super easy, right?
Houston, we have a problem.
They start imagining a new life, firing up spreadsheets, penciling in vacation days, and maybe even pricing the new Tacoma with a leather trim. But really, here's the reality that I've seen in nearly 2 decades is that the fantasy dies the second they talk to the lender. And I don't want to sound like a curmudgeon, but the first real question that comes up, and it always comes up, is this: how much are you bringing to the table? And that's not just a money thing. It's a experience. It's a personality. There's a lot that goes into buying a business that goes well beyond just the cash. But that first question is how much you bringing in, so that I can begin to figure out what that structure is. So if your answer was, well, I was hoping to borrow it all, then that deal is already dead and on life support, probably not going to get done at any SBA lender. So there are unique circumstances where that might actually come to life if you're a business that is going to try to expand and buy another business that's in the same setup or same industry. A lot of weird nuances, but hit me up in the DMs and I'll get back to you on ways that you can do that for your particular situation. Most SBA lenders are going to require at least 10% equity injection into the deal. It's not really optional, it's not negotiable, it's required. And that's off the total project cost, which means that if you took the purchase price plus working capital plus closing costs plus any fees, push that all together, that's your 10% number that's going to come off the top. So sometimes a portion of that can come from the seller in the form of a note. But not just any note, it has to be on what's called full standby. Particularly, that means that the seller agrees to not take a single payment from you, the buyer, on that note until the SBA loan that you have with us is fully repaid, or the bank gives them permission to receive it. Now, that last part of giving permission to receive it is going to be very nuanced depending on your deal and the way you negotiate it. But really, the spoiler is most sellers aren't that thrilled about having money sit by and do nothing for 10 years. They want to get paid. Granted, it can earn interest, but they don't want to wait around 5 or 10 years hoping that you don't wreck the business and can't pay them back. So in reality, you need at least 5 to 10%, erring on the side of 10% in real cash that is yours. It's verifiable. It's got to be sitting in a bank account with your name on it or your business's name if you just set that up. It can't be just chilling in your uncle's account and with some weird note coming in. It can't be a hard money loan or something down the street. It's not that it's complicated as the storyline. It's got to be clean, liquid, documented money. Plenty of other things we can go into on ways to get creative and build that up, and I'll get to you on future videos on ways to build a solid capital stack that is both SBA ready and will return you the most profit that you need after taking over that business. Okay, let's bust another myth while we're at it. Isn't the SBA backing the loan? So I'm personally not going to be on the hook for it, right? That's where you're wrong. So the SBA guarantee protects the bank, not you. If the loan defaults, the SBA covers a part of that loan, of the bank's loss. But you're still personally responsible for that full amount.
What did you say?
So they're taking the risk off us greedy bankers, but in the end, they're making it so that you still have to be on the hook for it. And that's how they provoke a bank like us to even want to lend to riskier transactions, which in most cases smaller business owners tend to be a riskier investment. So understand that this means if the business fails and you can't make the payments, that they can come after your personal assets. So if it's cash, investment accounts, or even real estate equity, as long as it's been pledged, which won't be a surprise because the bank will have told you this well before you sign your loan documents, it becomes fair game when we go to take over. They're not going to levy your personal accounts after the fact. They can't. SBA is not the IRS, so they're not going to come in and try to steal money out of your account. It's going to be only the things that you put up, that lender put in their loan documents that you signed prior to close. So be sure you're paying attention. So you cannot LLC your way out of this or of a personal guarantee. You can't put layers and layers of entities to try to stop that risk from falling back on you. You're not walking away clean if this goes south. That's not how it works. You're putting your name, your credit, and your financial future on the line when you sign the dotted line. So if that gives you heartburn, and I think it should, you take it seriously, it's because that's the weight of real ownership that goes along with this. Now let's talk about what I call the 90% illusion. And this is because the reality of what goes into actually buying a business is more than just the initial purchase price number, as what is the total project cost. So you'll hear people say, oh, SBA only requires 10% down. And honestly, in theory, that is correct. But what they don't tell you is that assumes that everything else in the deal is flawless. So if the business has clean financials that you're buying, strong historical cash flow, and the buyer has solid experience, yes, you as the buyer need to know what the hell you're getting into. But lenders are likely to stick at 90% loan to cost if all of those line up. But the second something feels off, that 10% gets real flexible. And I'm talking real fast. So maybe the cash flow is inconsistent. Maybe the buyer's resume doesn't align. Maybe the seller's books are a mess. And in those cases, the lender might still lend around 90%, but they'll want more of that 10% to be real cash, not just seller paper. So if you're trying to edge that risk and you've got a kind of a messy story and a messy business you're stepping into, you're likely to run into some problems trying to hit that 90% mark. So if you're banking on seller financing to make the deal work, remember this: a structure of that seller note matters a lot. So if it's not on full standby, it's not really helping your equity requirement. If the seller expects monthly payments right away, you're going to have to bring up more cash to close the gap. So yes, 90% financing is possible, but it's not promised. It's earned, deal by deal. All right, so let's clear this one up once and for all. You are not selling the lender a dream. You are proving a business can survive with debt on its back. That's what underwriting is all about. And lenders use 4 filters every single time. These are the big ones. The business, is it healthy? 2 to 3 years of financials, consistent revenue, strong bottom line cash flow. That's what we're looking for. All right, so the business. The buyer, do you have relevant experience? Can you run this business from day to day without it crashing it? Number 3, the structure. Is the down payment sufficient? Is the seller financing on standby? Is the working capital built into it? Is everything there that you need to run that business successfully built into that structure? And finally, the transition risk. Is the business owner the face of the brand? Will customers vanish when they leave? Are the numbers dependent on sketchy, weird ad backs or some story of the way that the seller's gotten around paying taxes? So if even one of those 4 pillars are weak, the whole deal starts to really wobble. And if all 4 are strong, you're a business and you're doing great. Look, if you're serious about buying a business, you can't start prepping once you've actually found a listing. By the time the deal hits your inbox, the clock's already ticking. Trust me though, SBA loans are a time-sensitive dance. Appraisals, underwriting, franchise reviews, landlord approvals, it all takes a hell of a lot of time. And if you're playing catch-up, you're already losing, and then you're going to have a hard time hitting those metrics that are needed in your contract. So here's what to do now before the deal shows up. 1, get your personal financials as tight as possible. So every SBA lender is going to ask for the personal financial statement. That means listing out your assets, your liabilities, monthly debt obligations, liquid cash. You also need the last 3 years of personal tax returns. Not, I'll get them from my CPA next week. You want them now. You want them today. If that stuff is still missing or messy, clean it up as soon as you can, because no lender is going to trust you with $1 million acquisition if you can't track your own financials. Next, document your experience like a CEO, not an employee. This isn't a resume. This is a narrative. You're really telling the lender, here's why I'm qualified to run this business and why I won't burn it to the ground. If you've managed people, dealt with vendors, built systems, led operations, maybe you've grown a team, put it down. Connect it to the business you want to buy. Lenders don't need perfection. They really just want to know relevance. They need proof that you've seen the battlefield before. Next question is, know your liquidity down to the dollar. Where is your cash? Because lenders will ask for proof of funds, bank statements, brokerage balances. If all your money is locked up in your 401k or tied to your cousin's crypto fund, that's a serious problem. You don't need millions, but you need accessible liquid capital. That's the difference between a funded deal and a dead file when it hits my desk. Now let's talk about what actually kills most acquisitions deals. It's not the business, it's not the buyer, it's the garbage documentation. So if your seller can't provide real tax returns or clear P&Ls or a clean add-back schedule, something that I can document with paper, walk the hell out of there.
Bye. See you when I see you. Goodbye.
Or push hard to get them in line before you submit to a lender. So if you're working with a broker, demand the full financial package. If you're talking to a seller directly, you better know what questions to ask. And here they are. I'll drop them down for you. How stable is the revenue? Who are the key employees, the people that are sticking around that are really holding that weird little stick structure up and actually generating the money for the business? Is the seller working 70 hours a week or completely hands off? What's the customer's concentration look like? Because here's the thing, garbage in, garbage out.
It's trash.
And if the lender sees chaos, they honestly assume that business has a hell of a lot of risk. So when they assume risk, they either decline it or they require more cash, more assets. They want more to the table than just what you've already put there. Deals don't stall because of underwriting. They stall because of uncertainty. Your job as a buyer is to eliminate the uncertainty for the lender. That's how you build a lender's trust. At the end of the day, buying a business isn't about convincing a lender to believe in your dream. It's about showing them a deal that works. Whether that's on paper, in real life, and under stress, they want to see this. So many buyers think that they'll figure it out once the LOI is signed, but this isn't a college project that you can cram in for. This is a real deal with real money, real risk, and real consequences if you mess it up. That means respect the process, respect the bank's time, respect your seller, and most of all, respect yourself enough to walk in ready. Because once the deal is done, there are no do-overs, only ownership, really. Only execution. Now I really feel like it's my job to tell you what most people won't. And that's you don't need to be a genius to buy a business. But you do need to be ready to carry the weight. You need clarity, cash, competence, and commitment. And if you've got those 4 things dialed in, the SBA program is really the right tool for you and can be very versatile in anything you're trying to do. You can buy cash flowing businesses. You can create generational wealth. You can own something real, not just trade time for money. But if you skip any of those steps, cut corners, or pretend you know what you're doing when you actually don't, this process will chew you up. So I've helped hundreds of small business owners get these deals funded, and the ones who win, they don't just wing it. They show up like they already own the business. And if that's you, you're in the right place. If this video helped you understand the truth about buying a business with an SBA loan, do 3 things for me right now. Number 1, subscribe to the Lords of Lending YouTube channel. This is where we drop new videos, real deals, breakdowns, and honest strategy for business buyers just like you. Number 2, click the link in the description. That'll take you to our free toolkit. We've got SBA prep checklists, buyer financial statement templates, and deal readiness guides waiting for you. And we're constantly developing new value-added data to help you be more successful as you buy, go through the process of buying, take over, and actually run your day-to-day business. Number 3, join the Lords of Lending email list. You'll get actual value every week. No spam, no fluff. Just tactics and tips from people who've actually funded deals. Because if you're serious about becoming a business owner, we're here to help you do it the right way. This is Shane Pierson, the Deal Alchemist, signing off. And remember, in business and in lending, honest capital always wins.